Now we will solve one problem on cash flow statement. A simple balance sheet is here. Look at the balance sheet and 2 years figures are given to you. Share capital 2018 50,000, 2019 70,000. Share capital, so it becomes a financing activity. You are getting proceeds from financing activity rupees 20,000. Just remember, then we will solve the problem. Then reserves for the first year you had 5,000. Next year it is 7,500. So it has gone up by 2,500. You have made additional provision that is to be adjusted in profit. Creditors, when it comes to the cash flow statement, it is a current liability. So it comes under working capital changes. So first year it was 12,000. Next year it has gone up by 15,000. We will see how the adjustment is to be made. Then bank loan, which comes under financing activity, it was 21,000 first year, 20,000 next year. So you have repaid the loan by 1,000 rupees. And the profit and loss account, which is credit balance, liability side is a credit balance. So first year it was 5,000, second year it has become 7,500. That means it has gone up by 2,500. It's very clear that the current year profit will be rupees 2,500. That is 7,500 minus 5,000. Come to the asset side, furniture. Furniture was 50,000 for the first year. Second year it is 45,000. Nothing is mentioned in the adjustment, so we will consider the difference 5,000 as the depreciation, maybe 10% depreciation. Then debtors, that is 10,000 for the first year, 8,000 second year. It will come under working capital changes. We will see when we solve the problem. Investment, they must have invested somewhere their funds. 23,000 was the investment for the first year, and it has gone to 47,000 for the second year. So it has gone up by 24,000. So this is your investing activity. And the bank balance, we will arrive at the opening balance was 10,000 and the closing balance was 20,000. So the total, and you are being asked to prepare cash flow statement under indirect method as per accounting standard 3 revised. Here the solution, a very simple problem and very simple solution to explain the basics of how to prepare cash flow statement under indirect method. This is very important. Do it very systematically. First A, it is cash flows from operating activities. First you have to take the net profit for the current year. I have already told you it was 7,500. Figure was 7,500 for the second year. Opening balance was 5,000. So difference between the current year profit, that is 7,500 minus 5,000, it becomes 2,500. Then we have transferred some amount to general reserve, that is to be added to the net profit to arrive at the operating profit. So if you see that difference, it is 2,500. So you are getting a figure called as net profit before tax and extraordinary items. 2,500 plus 2,500, it comes to rupees 5,000. Then we are adding those extraordinary items. Now what is that extraordinary item here? That is non-cash item. Depreciation on furniture. So if you see, it was 50,000 and 45,000 was the figure. So depreciation is 5,000 that we have added and no other item. So 5,000 plus 5,000. Here you are getting operating profit before working capital charges, that is rupees 10,000. Then you add the working capital charges. Working capital is, it's the differences in current assets and current liabilities. So if you look at the current liability, you have only creditor. There is increase in current liability, it is to be added. It is rupees 3,000. And there is decrease in current asset, that only current asset that you have is debtors. So add that figure to that 10,000. So here it is 10,000 plus 3,000 plus 2,000. You are getting 15,000, and that is net cash from operating activity. You are getting figure A, net cash from operating activity. The second part of the cash flow statement, that you have to calculate cash flows from investing activity. Investing activity, there's only one purchase of investment which is there. We have already adjusted the depreciation. Purchase of investment, it is, if you consider that investment 23,000 for the first year and 47,000 for the second year. So you must have purchased investment worth rupees 24,000. So your cash is going out, deducted, isn't it? So purchase of investment less 24,000. Whenever there is less figure, you put that figure in the bracket. That is very clear. So same figure will appear. There is no other transaction in this area. So net cash from investing activity is becoming minus 24,000. 24,000 outflows. Okay, that is figure B. You are getting minus 24,000. Figure C is cash flows from financing activities. So what is that financing activity? We have proceeds from share capital. Share capital, first year it was 50,000. Current year it has gone up to 70,000. So it is increased by 20,000. So there is sale of share capital, sale of shares. It is 20,000 you have earned from the share capital. And if you consider another financial item, that is loan, what has happened to loan? It was 21,000 for the first year and it has gone down to 20,000 for the second year. That means you must have repaid rupees 1,000 less bank loan repaid. So 20 minus 1, the net cash inflow or outflow from your financing activity becomes 19,000. That is 19,000 plus. Now we have already calculated figure A, cash from operating activity 15,000, figure B, cash flows from investing activity minus 24,000, and figure C, cash flows from financing activities plus 19,000. So here now we can arrive at net increase or decrease. If it is negative, it is decrease. If it is positive, it is increase. So A plus B plus C, that is 15,000 minus 24,000 plus 19,000 becomes 10,000. Okay, this is net increase in the cash flows, rupees 10,000. Then to this figure, you will have to add the opening cash and bank balance. Opening cash and bank balance is the bank balance which is for the first year. Here it is 2018. So this is 10,000 rupees. So once you add that 10,000 rupees, you are getting the cash and cash equivalent at the end of the year, 20,000. And this figure should be equal to the figure which is shown in the balance sheet. That is cash and bank balance at the end of the current year. That is rupees 20,000. So we have solved this problem, very simple problem, to tell you the basics of cash flow statement, how it is prepared. So once you know these basics, then you can go to the next and the difficult ones. Wish you